Minutes interest rate and I are going to announce the interest rate announcement for the Bank of Canada. So today is April 12th, 2023, and interest rate and I are here today to help predict where rates are going in 2023. What do you think, interest rate? She is quite silent today. Where do you think rates are going to go today? No, she doesn't know yet. But I know that interest rate and I will be announcing an interest rate update in just a few moments, in about 15 minutes. But until then, I'm going to set her aside and we're going to take a look here today at what's going to happen here today on the Bank of Canada interest rate announcement and what news has been leading up to today. And interest rate and I will be thinking about where rates are going and all that. So she is a guinea pig. She's been with me now. She's my new mascot for my show today, and she's really excited to be here. I'm pretty excited to introduce you guys to her. We just got her, and if you guys know anything about guinea pigs, they love lettuce. And this one, I really hope loves interest rates because she's so pumped to be here today. So let me just put her aside, and I'll get right into what's going to happen today on Canadian Mortgage Weekly and our interest rate announcement. So in about 15 minutes, we'll be announcing where interest rates are headed. Bank of Canada is going to come out with a new update here. And I know that my little interest rate, oh, look at her. She's pretty cute. She's going to help me predict where rates are going. So if she eats, let's say if she eats, then interest rates will go up. If she doesn't eat, interest rates will stay the same. And if she hides away, interest rates will go down. Who knows? We'll see. But anyway, what news has been leading up to today? Well, in Canada, the jobs report came out in February, and that showed that jobs did increase in February, meaning that the economy is going well and that interest rates, usually that puts an upwards pressure on interest rates. However, right now, we're seeing that, no change is really expected. And last time Bank of Canada met, they actually paused any interest rate decisions. They actually didn't raise rates. They didn't make any changes. They didn't lower rates, which was great news for any variable rate mortgage holders and home equity line of credit holders. And with that, brings me to the next thing is where have the bonds been at? And where's the bond yields been sitting at? And why do I talk about the bond yield? Well, the 5-year bond yield is something that a lot of banks go off of for their fixed rates because they have 5-year fixed rates. And the bond yield is actually over 50 basis points lower than it was back in March. So what do you think that's going to predict today? Interest rate? You don't know? She doesn't know yet. Okay. You're really excited to be here, I can see. You're purring in my hands. There we go. So the bond yield is currently sitting at 2.98%. And for this 5-year bond yield, that means actually interest rates have actually lowered now by 50 basis points on the fixed rate side. So they've been actually decreasing. So for the Bank of Canada actually to increase rates when interest rates have been decreasing on the fixed side would be very odd. Now for the CDOR rate, that's actually a rate that I follow to determine whether or not variable rates are a good competitive option. And the CDOR rate actually has been holding steady, currently sitting at 5.06%, which is only 0.03% higher than the same level last month. Very small change, been holding steady. Well, you're not running away or anything. You're just sitting here. You're loving this. You're loving being my new mascot today. I wish that people could see you. We need a second camera here today. She's just hanging out, as you can see, just hanging out, being a guinea pig. I'm going to call her interest rate. This is my new guinea pig today. We just got her. Oh, you're on the cable here. There we go. So variable rates remain actually not very competitive right now because they've been so much higher than fixed rates right now. And because fixed rates are sitting so much higher, variable rates are sitting so much higher, many people are taking fixed rates, either a 5-year fix or even a 3-year fix, because, and I'll talk about why in a second, but a lot of people think that rates are not going to stay high for the full 5 years, and they don't want to lock in for the full 5 years. Right, interest rate? All right. So what have the articles been saying in Canada? Well, articles have been saying that inflation has been slowing. It's still pretty high, though, at 5.2%. And fixed rates remain high, but lower now than variable rates, as I mentioned. And they have decreased by about 50 basis points since the last time we met for the Bank of Canada interest rate announcement in March. All right. So while I'm chatting here, I'm going to load up the Bank of Canada's portal where they do make this announcement, just so I have it ready to go. In about 8 minutes, we'll be having that interest rate announcement come out. And I'll just have it on my screen here, ready to roll for all of us here today. All right. And the big banks, RBC, National Bank, TD, they're actually all predicting a rate pause until the end of 2023. And then they're also predicting a rate decrease either at the start of 2024 or possibly late 2023. All right. So I don't know what you guys feel about that, but if you're looking for a home and you take a variable rate and interest rate predicts it correctly, then we will see actually anyone who takes a variable rate with rates decreasing in 2024 will all of a sudden have those payments on their mortgage go down and will benefit from the lower rates. But yes, RBC, TD Bank, National Bank are all forecasting a rate pause until the end of 2023, with rates going down or actually perhaps continuing to stay paused starting at the end of 2023 and going into 2024. So a rate decrease predicted there by those banks. So what are my clients saying to me? Where are they sitting at? What's the growing sentiment? Well, those who are waiting to get into the market actually are now starting to get into the market. I'm seeing a lot of people that have been renewing their pre-approvals over and over again and telling me, Joe, we think that rates are too high, house prices are too high. We're waiting for either rates to go down or house prices to go down. They're actually now deciding, let's jump in. Let's get into the market now. We feel that rates will be high, but we're okay with it because a lot of these clients now feel that the housing market has bottomed out. We have seen house prices overall since the peak in February of 2022 decreased quite considerably in some markets 20, 30, 35%. Some specific neighborhoods more than 35%. And as of last month, not last month, but February of 2023, we actually saw the average national house price in Canada increase by 8%. That's a huge increase considering we've been seeing quite large decreases over the last few months since February of 2022, which was the peak. All right, in 5 minutes, we'll have the rate announcement. Interest rate is not running away, which means rates are not going down. All right. And interest rate here is my new mascot today for my interest rate pre-show. So everyone say hi to interest rate. Hi. She's loving being here today. She's purring in my hand. She's not eating anything either, which means that she doesn't think that rates are going to go up either. She's just hanging steady. So she thinks rates will pause. she's looking like rates will pause. Let's see if interest rate gets it right. All right, so clients are now starting to jump in the market. As I said, we have about 5 minutes till the rate announcement comes out. Clients feel rates will remain high, and many are actually locking in for 2 to 3 year terms and 5-year terms. No one's taking a variable. Those who are locking into a 5-year term believe that rates will remain high for the next foreseeable future, and those locking in for 2 to 3 year terms foresee rates remaining high only temporarily for the next year or two and don't want to lock in for the full 5 years, but want to lock in for the time being and lock in again when the renewal comes up in 2 to 3 years. So when's the last time there was a rate increase? Well, that was actually in January of this year. It was up 25 basis points. So we did have an increase this year in January of 25 basis points. The biggest decrease we've seen since is a 100 basis points increase in July of 2022. And that was because inflation actually peaked in June. The Bank of Canada needed to do something about that. The last time there was a rate decrease was way back in March of 2020. That was a 50 basis points decrease back when the pandemic first hit. And the last time there was a rate pause was just last month in March of 2023. All right, where are we sitting at for today's interest rate announcement? Well, right now, still not published. It's 10 a.m. Rate will come out. Still looking at we're looking at 3 more minutes. And interest rate has peed all over my desk. What a lovely aspect here. So this is my interest rate mascot for the Bank of Canada interest rate announcement. Her name is Interest Rate. She's my new mascot for the pre-rate show here with Joe Bladek. Say hi. She is going to predict today's interest rate announcement. If she runs away, rates are going down. If she eats right here, rates are going up. If she hangs steady, which so far she is, and taking a whiz all over my desk, we're going to see rates go pause. So we'll have that announcement in 2 more minutes here. What's the rates? What's the websites that are reporting here? Well, a lot of websites are reporting that there is going to be a pause on interest rates. The jobs report did come out in February showing that there could be future rate hikes because it was showing that additional jobs were created for the economy in January and in February. However, there is conflicting economic signals because the GDP did slow at the end of the quarter of 2022. And we are also seeing a lot of companies do layoffs, and we're also seeing inflation slow. So conflicting reports here, but we'll have to see what the Bank of Canada decides. We have almost 1 more minute here before the Bank of Canada decides and publishes its rate announcement. We're really excited here today. And the rate hike chance as of this morning from Mortgage Dashboard, which is a leading mortgage news website in Canada, shows a negative 25% chance of increase today and a negative 100% chance increase in 9 months. And just before we announce the interest rate announcement here, we have about 30 more seconds until the Bank of Canada does announce the rate. We have our next meeting, which is going to be in June 7th, 2023. And that's going to be just before the summer starts. So while we wait here for the Bank of Canada interest rate announcement, it's almost 10 a.m. My name is Joe Bladek. I'm a mortgage broker serving all of Ontario. I have my interest rate announcement mascot here. Her name is Interest Rate. And we here today are going to announce the Bank of Canada interest rate announcement. And here we are. The rate has been announced. Interest rate, you were correct. Bank of Canada maintains its policy rate. So way to go, Interest Rate. Everyone give her a hand. She correctly predicted today's interest rate. She stayed steady here on my desk. Of course, she gave me some nice surprises here with what's going on. But the Bank of Canada does maintain its policy rate and does not make a change. So it says here, Bank of Canada held its target rate overnight at 4.5%. It's been sitting at 4.5% now since January 2023. It also shows here that the Bank of Canada is continuing its policy of quantitative tightening. It shows that inflation in many countries is easing in the face of lower energy prices, normalizing global supply chains, and tighter monetary policy. And at the same time, labor markets remain tight, and measures of core inflation in many advanced economies suggest persistent price measures, especially for services. So services are growing by the sounds of it. So interest rate, what do you think about that? What do you think about our interest rate announcement this morning? You happy about your prediction? All right, I'm gonna have to clean my desk up here and disinfect it quite heavily here. She's giving me a nice surprise this morning. All right, global economy growth has been stronger than anticipated. Looks like growth in the United States and Europe has surprised on the upside, but is expected to weaken actually as tighter monetary policy continues. Now, this is interesting that Canada maintained its policy rate today because the US is expected to possibly increase their policy rate by 25 basis points. Now it goes on to say that US growth is expected to slow considerably in the coming months, which is interesting. Also shows here that China's economy has rebounded, particularly in services. Overall commodity prices close to their January levels. Okay, so looks like the monetary policy report for the Bank of Canada in April projects growth of 2.6% this year, 2.1% in April, and a whopping 2.8% in 2025. So it's quite a bit more information here. I'll try to go through it with you guys here to get to pick out the important parts. Canada is, demand is still exceeding supply. Labor market remains tight, and we just covered that here today by the jobs report coming out strong in January and February. Looks like the first quarter for Canada looks stronger than projected originally in January. Looks like exports and consumption will drive that. Labor shortages are starting to ease. Wage growth is still elevated relative to productivity growth, and strong population gains are adding to the labor supply. So that's actually coming from Canada's strong immigration policy. We are immigrating over 250,000 people each year into the Canadian economy, and looks like housing market activity remains subdued, which I can attest to that. Housing activity has been subdued. I've been seeing that firsthand. All right. As more households renew their mortgages at higher rates and restrictive monetary policy works its way through the economy more broadly, consumption is expected to moderate this year. Softening foreign demand is expected to restrain exports and business investment. Overall, GDP growth is projected to be weak through the remainder of this year before strengthening gradually next year. This implies the economy will move into excess supply into the second half of this year. Excess supply means lower inflation. Bank of Canada now projects the economy to grow 1.4% this year, 1.3% in 24, and 2.5% in 25. So all that's good. So now we're talking about inflation. CPI inflation did ease to 5.2% in February, and Bank of Canada's preferred measures of core inflation were just under 5%. So great news for anyone that's really concerned about inflation. Bank of Canada is showing inflation under 5% by measures of its core inflation. Looks like they are predicting that CPI inflation will fall quickly to around 3% in the middle of this year and then decline more gradually to 2% by the end of 2024. And recent economic data is reinforcing government's counsel to that inflation will continue to decline in the next few months. However, getting inflation all the way back to 2% could prove more difficult because inflation expectations. Oh, we have more surprises now. There we go. You just love being here, eh? Interest rate. All right. So we have here more difficult to get inflation out of 2%. And in the light of economic outlook and inflation, the governing council decided to maintain its policy rate at 4.5%. So what does this mean here? If you have an interest rate variable mortgage or a home equity line of credit or variable rate car loan or unsecured line of credit or variable rate credit card, your accounts will not be affected. Your payments will stay the same. Your interest will stay the same. And if rates did change, obviously they would be affected, but there is no change for you guys today. So interest rate, again, this is my new mascot for my interest rate pre-show. We will join her again next time on in June. On June, what is it going to be here? what did I mention? June 7th, we'll join with interest rate again for our next Bank of Canada interest rate announcement. Right now, we're going to be looking at the actually tomorrow, we'll be going over on my regularly scheduled program, Canadian Mortgage Weekly, at 11:30 a.m. Eastern Standard Time. We'll be looking at best times of the year to refinance your mortgage for home upgrades. And that's in line with Home Inspector Month. April is National Home Inspections Month, and we have home inspectors we're celebrating home inspectors all across Canada. All right. We have a few people here talking about my guinea pig here. So yes, hello, interest rate. She is very smart. I do love her. She is my new pet, and she's also my pet mascot for my interest rate pre-show. So she actually got the prediction right this morning. She predicted the interest rates would stay the same. There we go. The interest rates would stay the same. She was going to eat the lettuce. We had talked about this prior. Interest rates, if interest rates go up, she's going to eat her food, which is lettuce. She did not touch her lettuce. She was going to run away if rates were going to go down, but she was going to stay put if rates were going to stay put. And what did she do? She stayed put, and interest rates stayed put. So yes, it does seem like everything is going to plan by the Bank of Canada. Inflation is going down. We're at 5.2%. And as I mentioned here, the monetary policy does show that the inflation targets will reduce to 3% later this year and to 2% in 2024. So what do you think about that interest rate? Do you believe that interest rates will continue to remain steady because of that? No comment. So that's interest rate, everyone. I love her haircut, eh? It's pretty cool. Yeah. But anyway, this is my new mascot for my interest rate pre-show. She's going to be joining me again next time on the Bank of Canada interest rate announcement, June 7th of 2023. We'll have to see if she predicts the interest rates correctly next time. As mentioned, the Bank of Canada did hold things steady, and she did predict that things were going to remain steady this time around. Looks like the Bank of Canada is happy with the inflation going down, even though it's going down very, very slowly and still remains extremely high. I mean, we're way over the 2% that we need to be at right now. And because interest rates are remaining steady, who knows? Maybe the fixed rates in Canada will continue to drop further. Right now, they have dropped 50 basis points since we saw our last interest rate announcement in March. So interest rates have been going down on the fixed side for mortgages. Yeah. You have a lot to say here? Yeah. Say hi. And with fixed rates going down, we have a lot of folks actually getting back into the market that have been wanting to stay out of the market and not really go back into the market. So a lot of people are seeing, well, house prices are where they are at, and the fixed rates have gone down. And because fixed rates have gone down, it's actually increased affordability for a lot of folks. Because if rates go down 50 basis points, then affordability will go up just slightly. And with that in mind, it's allowing people to afford maybe an extra 10, 20, 30,000 on their mortgage. And with that, they're just able to get that house that they wanted to, because maybe that house was only $20,000, $30,000 away from their goal. So that's pretty good as well. Anyway, my name is Joe Bladek. I'm a Ontario-wide mortgage broker serving anyone who has a mortgage need all across Ontario. I work virtually here. Interest Rate is my interest rate announcement mascot. Her name is Interest Rate. She won't be here on my appointments with anyone that we meet over Zoom, unless obviously requested. But she'll be back here for our next interest rate announcement on June 7th, 2023. With that, tomorrow on my show, Canadian Mortgage Weekly, at 11:30 a.m., we'll be talking about the best times of the year to refinance your mortgage for home improvements. And just if you've or just tuned in, April is National Home Inspection Month. And with home inspectors, we celebrate home inspectors all across Canada. And with that, there's a lot of need for home inspectors. And when you get a home inspection on your house, it shows a lot of things that could be wrong with your home if you're putting it up for sale, or if you're buying a home, it shows what needs to be done. And there's actually certain times of the year that are best to refinance. And I'll be talking about that a little more tomorrow at 11:30. Yeah, it's interest rate. So she's my new mascot here today. She actually correctly predicted the interest rate announcement this morning. We had a meeting interest rate this morning. If she was going to eat her food, which is lettuce, which would mean that interest rates would go up, which, if she eats lettuce, that's actually quite a high probability. If she was going to run away, I had her here. She was going to predict that interest rates will go down, but she actually remained steady and ended up peeing all over my desk. But hey, first time interest rate was here on my show, and it was great because she remained steady and interest rates remained steady as well. So, all right. So there you go. Say hi to everyone. Oh, she's my guinea pig here, hanging out, having a good time. Check out her haircut. There we go. Say hello, everyone. Say hello, interest rate. Hi. So interest rates did remain steady today. And with that, anyone who has a variable rate mortgage, interest rates are remaining steady. And we won't see any changes to payments for anyone who has a variable rate interest rate mortgage. Anyone who has a home equity line of credit or a variable rate car loan or variable rate credit card or any sort of variable rate product, we won't see any changes with your interest rate calculations nor your payments. And as mentioned, actually, RBC, National Bank of Canada, and TD Bank are all predicting that rates will remain steady for the rest of the year until the end of 2023, and then actually decrease at the start of 2024, or actually maybe at the very end of 2023. And that kind of goes in line with the Bank of Canada's prediction of inflation actually possibly going down to 3% later this year, and then 2% into 2024. And if that's the case, we may even see slower job growth and contraction with the Canada's GDP, because the economic growth predictions are very, very low overall for the entire year. So we should see some sort of interest rate pause for the foreseeable future based on all that data. I know that the jobs report for Canada does come out in a few days. We should have that in about 5-6 days. We'll have the national Canadian house price average come out as well in the next few days, usually in the middle of the month. The last national average house price report did show that the average national house price did jump 8% in 2023 in February, which was huge, the biggest increase we've seen since the peak of the housing market. That's the biggest month-over-month increase. And we also have other data showing that inflation has been slowing. It was at 5.9% in January, 5.2% in February, and we will have new numbers for inflation coming out in the next 5-6 days as well for inflation numbers. So anyway, my name again is Joe Bladek. If you're just tuning in, we just did an interest rate announcement with Interest Rate, my new pet mascot for the interest rate pre-show here. She correctly predicted that the Bank of Canada would keep interest rates where they are at. And this has been episode 132 for Canadian Mortgage Weekly. Tomorrow we'll resume our regularly scheduled program, 11:30 Eastern Standard Time, Thursdays every week. We have a new episode. Tomorrow will be episode 133. We'll be talking about the best times of the year to refinance your mortgage for home upgrades. There are certain times of the year that I think are the best times to refinance your mortgage. What do you think, interest rate? Do you agree with that? Maybe not. She has really nothing to say right now, but join me tomorrow as we continue our program. And until then, I'm going to sign off, clean off my desk, and thanks for tuning in today. Appreciate all the viewers, and the comments today. We hope you have a great rest of the day, and yay for the Bank of Canada keeping rates where they